What's up, y'all? It's your boy Andre, man. Welcome back to Making Dollars and Cents podcast with my guy Ron Cunningham. We back at it. You know, today we're talking about credit, man. We're talking about credibility, right? We're talking about how do you even put yourself in a position to be credible? What is credibility, right? How does that even equate to, business, right? And me and Ron was talking, right? And we was talking about, at the end of the day, if you're not a credible person in general,
right?
No one's trusting you. You know what I'm saying? So it starts with you as a person. It starts with you understanding, being a solid individual and paying people back. You know what I'm saying? Just being a solid individual and just being trustworthy. Because that's what it's all about at the end of the day, right? And when you look at acquiring capital, it's all about, is that person trustworthy? You know what I'm saying, Ron? So at the end of the day, you know what I'm saying? Like I really want to touch on credibility in the individual and credibility in business.
That's right. Well, the banks look at you just like the homies on the street do. You loan me $20, I'm supposed to pay you the $20 at said time. If I don't, I lose my credibility. Same situation with the bank. It's really not that hard, not that different. Sometimes the numbers are a little bit different. You got different zeros behind it. But at the end of the day, if you borrow, you need to pay back at the time that you agreed to pay back. If you do that, you got the 750, 800 FICO score. You don't, you end up with a 400.
Yeah. And when I be talking to people about credit, man, it's like they don't get it. And that's the point for this episode, right? Is we really want to break it down to where it's like, it is the most important thing. Because when you are credible, you know what I'm saying? If I loan you $5, $10, $100, $1 million, I want to know, like, I ain't got to ask for my money not one time. I never had to chase him. I never had to find this dude.
Yeah.
You know what I'm saying?
Man.
And the banks think the same way.
Exactly.
Because at the end of the day, the banks want to lend money. That's how they make money.
Hey, let me ask you something, Dre.
Uh-huh.
You ever loan somebody some money?
Yeah.
And they come back at you and say, man, yeah, I got your little funky $100.
Yeah.
What's your response?
Nah, man, my response is messed up. Because at the end of the day, it's like, dude, look, when you needed it, I gave it to you.
It wasn't funky when I gave it to you.
Yeah. When you needed it, I gave it to you. And that's what people don't get, man. It's like, at the end of the day, look, if you need it, you know what I'm saying, somebody will give it to you.
Yeah.
And that's a test. You know what I'm saying? And you can do it with your family, with your friends. At the end of the day, look, just test. See who's credible.
Man, I do it all the time.
You know what I'm saying? Like, look, take this $100 and just see what's up.
Yeah, you buy people sometimes. Sometimes you got to buy them off. I loaned a guy some money out in D.C. not too long ago.
Yeah.
Guy needed it bad.
Yeah.
Called, man, you got it. You going to send it? You going to do it? Man, yeah, I loaned him $2,500.
Yeah.
Now when I call him, I feel like I'm bugging him. And he's supposed to pay me back 6 months ago. Anyway, back to what you were saying, brother. That's credibility right there.
Nah, man, but at the end of the day, it's about being credible, man. At the end of the day, these banks look at you, and because you got to think about it. These banks don't know you. They don't know you for nothing. You know what I'm saying? So when you come into them, you saying, "Yo, let me get 10,000, 100,000, $1 million." They're like, "I don't know you, but I would love to lend you the money, but I don't know you." So is there a way that I can see if you credible, if you pay people back? You know what I'm saying? So that credit report is what shows that.
Right.
That credit report shows people that don't know you.
Right.
This dude didn't pay people back on time. He didn't pay people back over time. He's never had an issue. He ain't got no late payments.
Right.
You know what I'm saying? He ain't got no, he started paying them and he just dipped off. You know what I'm saying? The dude is a solid cat all through and through.
And it's called a FICO score.
Exactly.
Right.
Exactly. So when banks can look at you and say, yo, this dude is a solid individual, they're going to give. You know what I'm saying? Banks saying, yo, this young lady's a solid individual. They going to give. And they're going to give so much because it's unlimited capital.
Right.
People look at the world and they be like, yo, like we running out of capital and the world is going, you know what I'm saying? And we got these, this pandemic.
Not if you're credible.
Yeah.
Yeah.
Understand something.
Yeah.
These banks ain't running out of no type of money no time soon.
Remember, money is product. Mm-hmm. People want to put product in hands they know they're going to get their money from. If you show up good on a credit report or your FICO score is 700, 750, 800 top number, one of the top numbers. I know people that maybe have up to 850s. If you have those type of scores, any bank anywhere wants to put their product, money, in your hands. And that's the goal. How can I communicate with a bank, with an institution that has money? How can I communicate that I'm that guy, that I'm that person, I'm that girl, I'm that person that they need to trust? And if you have a score that says I pay people back, they will fund you. Simple and plain.
Simple as that. Simple as that. And I remember, like, when I first started, getting into, buying real estate and like learning about credit, you know what I'm saying? I had so many people like, man, the bank ain't gonna give you, they not about to give you no money, man. Like, just forget about it. They not giving you talking about you about to go get $500,000. They not giving you no money. You know what I'm saying? And I got discouraged, right? But I was studying, I was learning. I'm like, man, like, it's something. You know what I'm saying? Because I'm meeting people who's getting funded. You know what I'm saying? And like through that whole process, I really realized that, these banks, and I'm not gonna say it's not hard for us as blacks. I'm not gonna say it's not hard and we don't go through our
It's harder. It's harder. It's true.
It definitely is.
That's why we're here.
But what I am gonna say is that you can beat the system. You know what I'm saying? Because they have all of this money that they have access to. Yeah. And they have to lend it to somebody to make money on their money. Exactly. So at the end of the day, it's like putting yourself in that position, understanding bank criteria, and Ron touched on it before, right? Where it's like, it's just a criteria. If you can understand and knock out that criteria, the bank is gonna give you what you're looking for, but you have to meet the criteria. Right.
Just to bounce off what criteria looks like. Mm-hmm. Job history, creditworthiness, what your score is, how you pay people back, when you pay people back. If you borrow $1,000 and you agree on terms of $100 per month for 12 months and you keep that agreement in place, you have credibility. If you don't keep that, you don't have credibility. So those are some of the things they're looking for. They definitely want to see that you have a wherewithal to hold a job for a certain amount of time. 2 years is the minimum amount of time they want to see you on a job. Mm-hmm. That's how the banks look at it. If this guy can hold a job for 24 months and consistently pay his bills and make payments on the credit he owes, he's credible. It only takes 2 years. Mm-hmm. It's not like they're asking for 10 or 15 years. It's fairly simple when you really break it down. But people tend to, put other priorities in front of people they borrowed in front of and sometimes mess their credit history up. Yeah. And that's what I want us to get away from. Put a plan together where you can pay your bills for 24 months on time each month. Things do happen. COVID was something special. Mm-hmm. I do understand COVID because I went through it and I caught COVID, and I could see how you can get tripped up. COVID was one of the first scenarios that lenders and banks gave people breaks. Yeah. And PPP loans. Yeah. God bless those that took them out illegally. Hope they're gonna be all right in the future.
Hey, no, we gotta talk about the PPP loans for real, because I want to touch on it.
Well, they calling them something else now.
They coming to get you.
Yeah.
They coming to get you.
Uh-oh.
They coming to get you. So with the PPP loan, right?
Yeah.
It's like everybody decided, you know what, we can make up a business. Right? We can make up a business.
Yeah, overnight.
Yep. And we can say that we own this business in order to get the PPP loan, right?
Yeah.
And we've seen it across the world, right?
Yeah.
People getting access to 20, 30, 50, 100K, and they running it up, right?
Yeah.
And it's great. It's great for the time being, but the fact of the matter is that's not a real loan, right? That's something that was a natural disaster. That's something that came and went. You know what I'm saying? So when we talking about loans, because I put a lot of information on social media and people hitting me up and they hit me in the DMs and they talking about some, hey man, is that the forgivable loan? I'm like, fam, get over it. You know what I'm saying? That ain't what this is. You know what I'm saying? When you talk about a real lending, you talk about, showing real credibility, it's the banks really want to see, right? They gave you the benefit of the doubt when it was COVID, and they said, hey, we're gonna give people money. And at the end of the day, people think that they are outsmarting banks. In reality, it's like,
you remember that conversation I had in the last podcast?
Yeah.
Lenders never lose.
Yeah, it's like, you got to understand something. People think that they outsmarting banks. You're not outsmarting a bank because they do that every single day.
Every day.
They know what they're giving you. Let's be clear. They know what they get. They not sitting there like, I'm gonna just give them 20,000. It's gonna be all. They know what they're giving you
every day.
So when you think, you outsmarting banks and I got away for now.
For now,
you know what I'm saying? And it is what it is. But that's neither here nor there. But the point is that at the end of the day, when you talk about real lending, you talk about real loans. It's like at the end, banks just want to see credibility. Yeah. Show that you pay people. You know what I'm saying? Like, if you pay people, you can get access to some money, man. You can take that money and you can invest that money. And I talk to so many people that's like, I don't borrow, I don't do the lending, and I don't borrow money, and I like to stack my money, and I don't owe nobody. And I want to be clear, you know what I'm saying? Because especially with our culture, it's a misconception, right?
Preach, brother.
We'll sit there and try to stack 20,000 from our job, 100,000 from our job, $1 million from our job, and we'll take years upon years upon years to do it. And we finally stack the money. We try to invest the money, and that investment may work or it may not work. Right? You got other cultures that while we're stacking our money and we busting our ass trying to sit there and get in position, and we not gonna eat out, we not gonna buy the clothes we buying,
we're not gonna drive what we want to drive.
We're not gonna drive what we want to drive. It's other cultures that they understand lending. Mm-hmm. They understand
OPM.
Mm-hmm. I'm going to position myself.
People's money.
Mm-hmm. Exactly. I'm going to position myself to get access to funding, and I'm going to take that funding, buy an asset that's bringing in income, right? So when we look at that, we talking about, I was working at McDonald's. You know what I'm saying? And I've seen people do it. I was working at McDonald's. I understood credit, got my credit in position, got access to some funding, took the funding, bought an asset that's bringing me in $2,000 a month.
Well, wait a minute. Hold on. Explain what an asset looks like. Like, what is an asset? Mm-hmm. Like, to you, what is an asset?
So and I'm glad you said that, because a lot of times we get the misconceptions of what assets and liabilities is, right?
Okay.
Asset is something that's bringing in positive cash flow, right? If you buy something, mm-hmm. it could be a vending machine. Mm-hmm. I spent $3,000 on a vending machine.
Okay.
Right? Let's say I borrowed money to get the machine.
Okay.
Right? So if I borrowed, let's say, $3,000 to get a vending machine, and my payment is, let's say my payment is $200 a month, but I'm making $1,000 a month. Mm. I got a positive cash flow of what? $800.
Okay.
So when you talk about an asset, it's understanding. I'm not going to take, and when I say credit lines, I'm talking about credit cards, right? I'm not going to take a credit card and go to Louis, and I'm going to just run up. I'm going to go get the new bag because the new bag look good and everybody got the new Louis bag, so I'm going to go get it. You actually taking money and you buying something that's going to bring in cash flow.
Yeah.
Right? And that's what it's about. It's like, buy something that, whatever it may be.
Yeah.
If it's the vending machine, it's the vending machine. If it's the truck that you renting out, it's the truck. If it's a piece of property, that's what it is. But you're buying something where the expenses, are lower than what you're making on that piece of, property or that piece of, that investment.
Great point. It debt services itself. Yes. Debt servicing, meaning that you make more than what it costs to borrow the money. Period. Mm-hmm. Yeah, that's a good one.
Definitely, man.
Yeah, that was a gem right there, y'all. That was a gem. Check that right there. Write that down.
Yeah.
You want to have an asset. An asset means you make more money than the loan or what it costs to maintain the money that you borrowed originally to get the amount of money you got.
Yeah, man. And like I said, I want to really be clear on that, because a lot of us don't look at that, man. We taught to go to school and we taught to work, and there's nothing wrong with going to school and working, man. It's nothing wrong with that.
Not at all.
There's other ways to make money. You know what I'm saying? And if you just taught one way and one way, and you focus on that one way, then you're gonna do that one way. But it's other ways to do that, and I'm watching people do it over the years. I've watched people, be able to buy assets and be like, yo, like, I make $10,000 a month from, the fact that I own these Airbnbs, the fact that I own this vending machine route. Mm-hmm. Where I bought 20 vending machines, 30 vending machines. I'm making $10,000 a month, and I don't have to do anything. Matter of fact, my little brother, my little nephew, my cousin, they manage it. You know what I'm saying? So all I did was buy it. But in reality, I didn't even have to go to work to even buy it because I borrowed money to buy the asset, and the asset's kicking me cash flow every single month.
Okay.
You know what I'm saying? So at the end of the day, like I wanna, and I don't want to sound like I'm preaching, but it's something that's important, man, and it's something that our culture don't take heed to. You know what I'm saying? So that's what it's about, man. Is getting credible and buying them assets. You know what I'm saying? Taking the money from them assets and let the assets pay for your liabilities. You know what I'm saying? Let the assets pay for your cars, your clothes, your jewelry, your travel. You know what I'm saying? Do it that way. Because at the end of the day, you got more time with your family. You got more time with your peoples. You can do more. You ain't sitting there stressed at your job talking about, man, fuck my boss. He an asshole, and I'm trying to get $1 raise, but he don't want to give me $1 raise. And it ain't none of that. It's simple, like,
right.
I'm bringing that in. You know what I'm saying? I can live life on my terms.
Right.
That's what it's about.
Right. Totally agree, man. So I think you hit off on what assets mean. I want to go on a little bit of what funding means, So once you have the credibility, like he said earlier, you get into the position where you get funding. Well, funding is when a bank sees you credible and they want to give you funds. Well, what it takes to get funding is a job for a couple years, a consistent income, W-2s, taxes for 2 years or more, showing that you are consistent on any type of income source. And then after that fact, they underwrite and see how much money that you're good for. Say, for instance, you're trying to get a $500,000 house. The average payment on a $500,000 house is somewhere around, $3,000-$4,000, somewhere around there. Don't quote me. I'm not looking at a matrix right now, but depending on the interest rate, somewhere around $4,000 a month. Well, if they see that you're making $8,000 a month consistently, they'll give you that no problem. They see you make double the amount. They see you have good credit score. They see you're a credible person. Then you'd be what you call a person of interest, and they would give you what you call a LOI, or a letter of intent to loan you money on that particular purchase or that particular property. That's what they're looking for. They're looking for credible people that understand the business of keeping consistent on-time payments and paying their bills on time. Credit. Mm-hmm. And that's one of the things that I've got on the notes here, and that's one of the things that funding is all about.
Yeah.
So we need to understand the underwriting process. Underwriting is what happens once you submit an application to any financial institution. It goes to the back room. You have probably an old lady with some glasses on, looking over your paperwork, doing all the math to see if you're a credible individual. They run your credit. They run your taxes, they run your check stubs, they run your background somewhat, and they see if you are the person you say you are on that application. And if you are, guess what?
Yeah.
You get approved.
Yeah.
And you can get funded.
Yeah.
And then you can that's a purchase you can make and move forward with your life. You can buy that 4-unit, that 3-unit, and now you can rent out these rooms, rent out these doors, and get income each month. So understanding how things work is what it's all about. It's not really that hard once you get into the groove of understanding what they're looking for. Yeah. So just pay attention, guys, as we do these podcasts moving forward. Understand these gems that we're dropping. Understand what we're saying. And if you don't understand, ask questions, inboxes. We'll give you some information at the end of the podcast on how you can ask questions and how you can get in touch with us. But make sure you do so we can ask you questions. We're here to give you information on how to get funded.
Yeah, definitely. And one of the things I want to touch on is stop counting yourself out. A lot of us count ourselves out from the jump. We go and say, yo, man, I can't do that, man. My credit ain't, man, I done had the late payments and I done had to repo on my credit and I can't do that. My mama said I can't. My auntie said I can't do that, man. I can't, You know what I'm saying? And stop counting yourself out. Because I talk to so many people that had already counted themselves out.
Yeah.
You know what I'm saying?
Lack of knowledge.
Because of the knowledge that you once had, or because that teacher in school said, yo, you can't do that. Oh, your auntie, you can't do that. Because they don't know.
Yeah.
At the end of the day.
Don't listen to people.
Yeah. Stop counting yourself.
Even if it's your mama.
Yeah. We here to tell you from people who doing it is you can start from ground zero, from nothing. Having, I started from a 400 credit score.
You know what I'm saying?
That low? It do. It do. And look, I'm a person that never knew about credit. I'm a person that I remember being.
Wait a minute, you done got to drove that Maserati outside, right? Then you drive up in the Maserati today. You got a white Maserati in the parking lot.
I do okay.
I see.
I do okay.
See. They don't get those away with no guy without no credit guys. I saw what you was driving in out there.
Man,
you done figured something out.
Yeah, you know what I'm saying. But it's getting that knowledge right. And
I got you.
And at the end of the day, it's like, I'm a person that really started from that 400 credit score.
Okay.
Messing your credit up early because you don't understand. I remember my first credit card. I got a Walmart credit card. I was tripping, and now that I look back, I'm like, man, I was tripping. You know what I'm saying? Because I got the credit card, and I seen like $500, and I'm like, they giving me money. I must be doing good in life because they giving me money. And I really felt that way. And it's like, looking back, I'm like, I was on some clown shit. Because I'm just, I don't know where my head was at.
Did you run it up?
Of course.
How much?
It's only $500.
How much did you run it up?
I bought everything.
500?
500.
Oh my God, you went crazy.
I hope I'm not I know I'm not the only person now, right? It's like, man, they gave me that card. I'm like, man, a nigga doing good, ain't he? God is good, ain't he? You know what I'm saying? So I'm sitting back like, man, Walmart must love me.
Little did you know, your score was in jeopardy.
I'm like, Walmart must love a nigga, man.
Your score was in jeopardy.
You know what I'm saying?
And that's how you got that 400.
Yeah.
That's the way to get the 400, y'all. Borrow the money and don't pay it back. That's how you get the 400.
Yeah. You know what I'm saying? So I borrowed that money. I didn't pay it back. And then, I was buying cars early, right? And,
me too.
And, when I was 16 and I moved back to Chicago, when I moved back out there, everybody had a car. You know what I'm saying? In 9th, 10th grade, you had a car. So, I started buying cars early. So, I'm like, 16, 17 years old trying to get, car notes. You know what I'm saying? So I remember being, I think when I just turned 18, I got a car note. I got an Impala, right? You know what I'm saying? At the time, Impalas was it. You know what I'm saying?
I remember those.
That was the whip. You know what I'm saying? So I got an Impala. I got a car
You put the
note.
rims on it?
I ain't put the rims on it.
This is stock? You went stock?
I ain't had no money to put the rims on.
Did you do the tint though?
I did the tint.
Oh yeah, you was a real nigga.
I did the tint.
You did the nigga shit. Yeah.
It was like a newer model Impala.
Okay.
Right?
Okay.
But to get to the point, the Impala was the whip at the time, right?
Yeah.
So I financed the Impala, right? And obviously my credit wasn't it. My mom
Co-sign.
My mom was like, I co-sign for you. I see you trying to hustle. You trying to get your hustle on.
Yeah.
And her credit wasn't amazing. You know what I'm saying? But she co-signed for me, right? And of course, I got the Impala. And of course, I got the note. They say pay every month on, I think it was like the 5th or something. Pay every month on the 5th. And I'm like, okay, cool. I guess I'll pay sometimes on the 5th, but sometimes I might not have it on the 5th.
Yeah.
And I'm not thinking nothing of it. You know what I'm saying? Fast forward, it's like I tore my credit down.
And your mama's.
And my mama's credit down.
Everybody tore up in the whole house.
You know what I'm saying?
Yeah.
So, but you're not knowing. She's not knowing about credit like that. So she's not telling me, you know what I'm saying? Like,
pay my shit on time.
Hey, pay that on time. You know what I'm saying? So, long story short is, we mess up our credit, and my credit was terrible. But once I start learning about what credit can really do for you, I start fixing it. You know what I'm saying?
Empower.
And I want everybody to understand is that credit can be repaired and restored. You can't sit there and be like, oh, man, I messed my credit up, man. I can't do nothing now. You know what I'm saying? Credit can be repaired and it can be restored. And once you get your credit in position, you understand how to really use the bank money. Okay. Because now the way I think, I'm like, look, I could have bought that car, had a $300 car note, put it on Turo, and rented it out every single day.
Gems.
And made surpassed the car note and the insurance and made profit on that same Impala.
Trims,
You know what I'm saying?
gems.
So at the end of the day,
Dropping gems, y'all.
it don't matter what the asset is. It's all about your mindset
And how you turn it, yeah.
and how you turn it. Understanding Turo's a platform right now that's popular, right? And it's similar to Airbnb, right?
Okay.
Where you can take an asset like a car,
Okay.
right?
You calling a car asset? I've never heard that before.
Yeah. I see a lot of people see, and that's the game though. A lot of people don't get it. It's like you can take a car, turn it into what's considered a liability, into an asset, put the asset on a platform like Turo,
yes, sir,
right, and make money off the car. You know what I'm saying? Same way you can do Airbnb. You can take an apartment, your 1-bedroom, 2-bedroom apartment, or a house, or whatever the case may be. Take that, put it on Airbnb, rent it out, and make positive cash flow. What we was talking about every single month.
So you mean somebody will rent a car from you, like they would Hertz or Enterprise or Dollar, and pay you the money to rent your car?
Exactly. Because you got to think about it like this: is you got people that they want to rent a car for the weekend. Yeah. You got some people that want to rent a car because they want to drive Uber.
Okay.
That's how they make their money, but they ain't got no car.
And they don't have credit to get the car.
Exactly.
Because they credit low. Yeah. So the alternative is go to a guy like you that has the car. Someone already loaned you the money.
Exactly.
And now you struggling to pay the car note. You rent it to this guy so you can pay the car note.
Yeah. Yeah. And that's when we talk about credibility, right?
Okay.
Is at the end of the day, if you credible, is so much shit you can do.
Okay.
Just for the simple fact that you credible. Banks trust you. You gotta understand, banks will give you can go get approved for 5 cars, put all the cars on Turo and make money off 5 cars. Now you got an income coming in.
Wow.
You know what I'm saying?
Wow.
So at the end
Sounds
of the day,
familiar. I know somebody did that.
Yeah. So at the end of the day, it's like the biggest gem I want y'all to take is be credible.
Yeah.
Like at the end of and if you wasn't in the past, like me, I fucked up the Walmart card. Walmart was looking at a nigga like, fam, this ain't your money, big dog. We need it back. Yeah. You know what I'm saying? But you learn from that. You know what I'm saying? You learn from that. And you apply it, and you say, look, it don't always have to be like that. That was a chapter in my life where I was immature. I didn't understand. But you know what I'm saying? You take the gems. You know what I'm saying? And you understand how to go do it, man.
Yeah.
And that's what it's about, man.
That's what's up.
You know what I'm saying?
Thanks for sharing that experience with us, man. That made a whole lot of sense. You know.
Yeah.
I really, really, really appreciate you sharing some of those backstories, you know, not just the success that you're having today, but that must have been really what created who you are today. Yeah. Those downfalls.
For sure.
You know, having those experiences made you make dollars make sense now. So now you turn your stuff into actual opportunity. So thank you for sharing those gems with us, man.
Yeah, I appreciate it, man. I feel like you got to go through it, man.
Yeah,
and I feel like that's been so dope, and so many people, including myself, right? It's like we want things to go so perfect, and sometimes you know what I'm saying. Yeah, sometimes it don't always go that way, but sometimes you get them learning lessons, right? Where you're like, man, I know what not to do now. You know what I'm saying?
And them lessons hurt too. When you're going through them lessons hurt. When you're in it, it feels like the last days of your life. But when you look back, you're like, damn, that's why that happened.
Yeah, nah, for sure.
And God's with you every single time. You're going to always make sure you got the information, just whether if you listen or not. Yeah. So thank you for sharing that with us, man. Wow. I mean, I think we need to segue and ask any questions to the audience, man. See if they have any questions about what we just discussed.
For sure.
So let's take a pause, man, and see what the audience thinks and what kind of questions they may have for us. State your name and your question, ma'am.
Renee, I was just wondering, what were the steps that you took to rebuild your credit?
That's a question for you, Andre.
Yeah, I think first and foremost is pulling your credit report. A lot of us, you know, we're not gonna pull that credit report because we so scared about, you know, man. I know it's messed up, so I ain't even gonna look at it.
I got a question. Where do you start with that? Where do you pull your credit report? What platform is that?
Yeah, so it's a lot of platforms, but what I tell people is download Credit Hero.
That's a new one.
Yeah, Credit Hero is an amazing platform.
HERO?
Yep.
Okay. Is that credithero.com?
Yeah, credithero.com.
Okay.
Right?
Okay.
Where you go in there and pull your score. Once you pull your score, you can really see where you at, right? It's like going to the doctor.
Okay.
You know what I'm saying? You look at yourself and the doctor looks at you and says, yo, like, this is where you at.
Yeah.
You know what I'm saying? You got this, you got that, you got this, you got that.
Okay.
I got remedies to fix it.
Okay.
You know what I'm saying? But you gotta address the problem first. So you can just constantly look at your credit, understand like where you at.
Okay.
You know what I'm saying? So I think that's the first step.
Okay.
You know, from that point, once you then dissect and you understand where you at, then you get a credit specialist to help you, you know, fix the issues that's on there.
Okay.
A lot of times people have negative accounts, and the crazy thing is people that have negative accounts that may not even be their accounts. A lot of us have. You know what I'm saying? Where we it's just on there, so we automatically like, nah, that's, you know, it is.
But
what
you got to
is.
address it. That's what you're saying.
Address
because it's not their job to address it.
Exactly.
They don't know if it's right or wrong. They just report.
Exactly. Address the issues head on, and then get a credit specialist. You know what I'm saying? And address it head on, and from that point, it's gonna bring a better feeling to where you at in life, because you like, yo, like, I now know what's going on with me. You know what I'm saying?
Yeah.
I don't have to sit there and wonder no more, and I have a real plan.
It's like not looking at your bank account before you go out for the evening.
Exactly.
Yeah, you don't know your credit score. You don't know how much money you got in the bank. You might get caught out there.
Exactly.
Okay, that makes sense. That makes sense.
Address the problem, y'all. Address the problem.
Okay. Any other questions? Name and question, please.
Anonymous.
Anonymous.
At what age do you feel that within our community we need to start understanding credit, what it is, what it means, what a FICO is? Like, at what point in age do you think we should understand the finance part of really our true being?
I say 12 years old is a great start, right before teenagers, because teenagers start having cell phones at about 12 or 13, and that's like the first bill, a cell phone bill. Every kid got a phone at 12 or 13. So in order to create a bill, you got to understand the bill. Even if mom is paying it, you need to know that you talking on this phone costs $100 a month. And if I don't pay this $100 a month, phone's going to get cut off and the credit will be affected, because that's how it works. At least what AT&T does. You know, they'll let you know if you're not paying your bills, you get cut off. So kids start acquiring credit at an early age. It's not 18, it's not 21, it's 12 years old. You know, my kids ask me, I remember every birthday, I got 3 kids. Every kid asked me at 12 years old, Dad, can I get a phone? Well, phones will come with a bill, son.
Do you not, how about this? Let me address it this way. What is the age that you think we should start building credit for our children? Because in most cases, our kids go to a college, a lot of times in a junior college, they're solicited from businesses who are like, oh, you can get a credit card because you're enrolled in school.
Same answer, 12 years old. Because by the time they're 15, 16, they're applying for colleges.
So what should a parent do?
A parent should open up a bank account or some type of situation where they have an ATM. They could do some type of advanced credit card or some type of, what do they call it, when they do the credit cards that they give. A secured credit card. As soon as that banks will allow you to do that. Now, don't quote me on the age of that. Might be 15, 16. Whenever a kid can get a secured credit card, you open their account, $200. Yeah. You put the $200 in, give them a credit card, and help them navigate through the credit system with that credit card.
So then what steps do you think a child should take, or that a parent should begin to give to teach their children how to operate in integrity? I heard a lot of things about pay your bills and do this and do that. That comes with operating within integrity. So how do we do something different as a community to begin to teach our children, so then we are uprooting and bringing in young adults who already understand integrity? Now they understand credit. They understand the value of it. And then they can now begin taking advantage of these things from 18 years old or even at the 15 years old. You know what I'm saying? that will make a difference versus being the 23-year-old.
Too late.
That part.
Too
who
late.
has to start over again.
Too late. My answer again is 12 years old. That's when the maturity starts in with kids.
Yeah, I think, and it's something that I do with my daughter now, right? My daughter is 10 years old. She'll be 11 next week, right? And it's having them conversations all the time. When we in the car, I purposely be on the phone, even though she hated
Speakerphone.
I purposely be on the phone,
Speaker.
have it on speaker on a car phone, so she can hear these conversations, right? To whereas now that she's about to be 11 years old, she's like, "Oh, Daddy, you gonna buy that property? Dad, the trucks. What you doing with your truck? Daddy, the credit."
Yeah.
So it's already embedded, and I purposely do it, right? So I feel like it's instilled in her. So she know, baby, you can do whatever you want to do, but you gonna own something. You know what I'm saying? Yeah. And that's how we rocking always. You know what I'm saying?
10 years
old. At 10 years old, wow. and I feel like that's important because they start seeing it's the norm to them. Because at the end of the day, it's all this stuff is norm. You know what I'm saying? We go to school because it's a norm. We go to college and we want to go to because it's a norm.
Right.
So if you start saying credit is a norm, business is a norm, buying property is a norm.
Right. Dinner table talk. Yeah.
Dinner table talk.
Yeah.
So once you do that, it's a wrap. They gonna know from the jump.
Right.
I'm gonna go. My daddy said buy some property. Matter of fact, he already done gave. So like my daughter, as soon as she turned 18, she walking into millions already because I'm buying properties to where I'm gonna slide it to her. You know what I'm saying? When she 18.
Right. Dinner table talk. Great answer, brother. Great answer.
It's been an amazing podcast, man.
Yeah.
You know what I'm saying?
Yeah, just giving knowledge, man. Dropping gems,
man.
bro.
Look, to wrap it up, look, credit is important, man. Credibility is important, man. Yeah. Stop letting people, stop letting people, you know what I'm saying?
Yeah.
Just what's the word I'm looking for? You know what I'm saying? Don't let people, steer you away from what's important. Credit is important, man. Yeah. Stop letting people, I spend cash, man. I spend cash. I got cash. I buy my shit in cash.
Yeah, anytime I hear that, though, I know I'm not talking to an educated person.
It don't. When you a kid, it make all the sense in the world. When you an adult, you must not.
OPM, baby. OPM.
You know what I'm saying? You don't know about. You're not up on the fact that they'll give you 100. You didn't know that.
Yeah.
You know what I'm saying?
Know your facts.
At the end of the day, look, credibility, man. You know what I'm saying? Whether it's with the banks or as a person, credibility is important. Be a credible person. You know what I'm saying? And banks will give. That's what they in business to do.
Product.
You know what I'm saying? Be a credible person.
Money is a product.
You know what I'm saying? Hold it down for your family. Pass the financial wealth, man, and create family legacy.
That's what's up.
And make your and deeper than anything, man, make your dollars make sense.
Making dollars make sense.
At the end of the day.
Man, I'm gonna end on that. I don't have nothing else to say, brother.
At the end of the day.
That was hot. That was hot, Dre.
At the end of the day.
Thank you, brother. I really appreciate you coming out, man, and teaching the masses, man. Our people need what you're giving them. The millennials need this information.
Nah, for sure.
I'm an old head, man. I'm 51 years old, and all my people set in their ways. They done with me. They don't want to hear Ron no more. But these youngsters in their 30s and 20s, they gonna listen to you.
Nah, man, we listening, man. I'm listening, man. Once again.
Yeah, you one of a million.
Yeah.
Yeah. But thank you for taking the time out to come and teach and preach. And how do they get in touch with you again, brother?
Man, once again, man, Polk Enterprises at Polk Enterprises. Hey, check the link below. At Polk Enterprises. Man, come find me, man. Come find us as a team. Me and my fiance, man. We doing it, man. We helping people. We giving back. We building financial freedom.
That's what's
building
up.
Legacy, man. Check us out, man. Where they find you?
I'm Ron Cunningham again. I'm with Real Quest Realty. We're on Instagram as Real Quest Realty Corp. And you guys can find us the same way. We'll drop a link. You'll be able to see it. We got a great producer here. Big Dave. Shout out to Big Dave, producer over here.
Oh, man. Shout out Dave.
He'll make sure that everything's edited properly and information is shown on the screen. So just thank you for taking the time out to listen, guys. And if any questions, drop them in the inbox and we'll get back to you with answers.
Yeah.
Making dollars make sense.
Yeah. Let's do it.
My man.